day, folks, and welcome to Market Correction Analysis by InTheMoneyStocks.com for August 3rd, 2007. What a day it was, folks. Unbelievable. We had a whipsaw day early on, and then a huge sell program coming into the markets later in the day. The type of sell program that just would not let up for literally since 1:30. I would say since 1:30 we really started to sell hard, and we continued right to the close, closing on the NASDAQ and the Dow at the lows of the day. And this is not just some small sell program. And let me explain today what happened. It was almost strange, all right? Early on in the day, we had some issues because Bear Stearns' debt rating was lowered, all right? That was a big deal as they got their debt rating lowered. Now, however, the CFO comes out and says, we're fine, everything will be fine. And Bear Stearns rallies. And let me show you this chart, guys. Bear Stearns' chart. All right, here it's downgraded. Here it comes out and talks about how they're fine. Look at this rally back up to the flat line. Literally, it dropped 6 points, rallied 6 points, and then trades in this bar right here. All right, now what happens here, folks? This is where it gets crazy. The CFO also, during the conference call, says this is the worst market, credit market we've seen in 22 years. It's as bad, if not worse, than the bubble, the internet bubble of 2000, of 99, 2000. And look at what happens to the stock. It gets pummeled. All right. Not only does the stock get pummeled, but the market reacts insanely to this. All right, and we see a drop in the markets. Look at this. This is the NASDAQ chart. This is right where these comments come out. Okay. All right. So this is what you have. All right, and we're hovering down here, right in this area, and then Cramer comes on the TV on CNBC, bashing Bear Stearns for saying anything. And this tirade I'm going to play for you guys because it's just that amazing. All right, and I set it up just to go in. He literally freaks out. He literally, I've seen him crazy on some of his shows. I'm not a big fan of his shows because it's a lot of craziness on there and it's a lot of hype and it's media and stuff. And you guys know I follow the technicals. But this tirade he went on was unbelievable. You guys can see it right here, all right, folks? I'm going to play it right now for you. All right? Here we go.
Open the darn Fed window. He has no idea how bad it is out there. He has no idea. He has no idea.
Cramer.
I have talked to the heads of almost every single one of these firms in the last 72 hours, and he has no idea what it's like out there. None! And Bill Poole has no idea what it's like out there. My people have been in this game for 25 years, and they are losing their jobs, and these firms are going to go out of business, and he's nuts. They're nuts. They know nothing.
Cramer.
I have not seen it like this since I went 5 bid for 500,000 shares of Citigroup when I got hit in 1990. This is a different kind of market, and the Fed is asleep.
Okay, but here...
Hey, folks, well, there's not much to say after we say that. You know, we see that. That was, you know, he's basically saying that what's going on in the credit market is a huge deal. Huge deal. And it sounds like he's saying also that people behind the scenes are calling him and saying what's going, you know, this is crazy, this is horrible, but no one's coming out and saying it. And he's also saying, well, what's going on with the Fed? The Fed's not acting here, and this is horrible. Do they think that it's not bad? Because it's horrible. And all I'm saying here to you folks is that the Fed is in a tough place. The Fed can't drop interest rates because the dollar will collapse. All right, but if the Fed doesn't drop rates, then the credit market is going to get screwed. All right, so if you guys notice this, and this is so key, and please, please understand this. If the Fed lowers rates, the dollar drops astronomically, and literally all our buying power in the world, in the economy, oil will go up because it's traded in U.S. dollars. Oil will skyrocket to $100 a barrel if he drops interest rates big time. All right, gold will jump. Every commodity out there will rise, and it'll cause inflation because all of a sudden the whole rest of the world has a great time because the dollar is cheap. But now all of a sudden, all of our goods that we're paying for in dollars, when oil goes up to $100, we're screwed. When rice and wheat and all this stuff that we buy because the dollar is so weak goes up, that's inflationary, all right? So the Fed's in a tight position here, guys, and I can't stress this enough. If they don't lower rates, the credit market's screwed, all right? The credit market is definitely screwed if they don't lower rates, and it's just a tough position. So anyways, let's talk about technicals right here, guys. You guys know I'm all about the technicals. You know, InTheMoneyStocks.com has been calling this market like crazy. All right? All right, here we go, folks. Let's look at this breakdown line right here. We saw them take out this low, and that's really when the selling started. And the close below here, this close below this line right here was a sell signal. In addition, you guys know the last couple of days I've been talking about our accurate call for the bounce in the markets the last 2 days. We have been dead on in every call between gold, oil, U.S. dollar, 10-year yield rates going up. When everyone else was going the opposite way, we stepped up. We took the hit. We called it, and we were dead on. And one more time, we were dead on here. And I'm going to show you the SPX chart. All right? The SPX chart, let's go right here. Now, you remember, we called the bottom here for a bounce at 1440, and we bounced up huge the last 2 days. From that low of 1440 bounce, but look what happened today, guys. We closed below 1440. That's a technical breakdown. All right, folks? That's a technical breakdown. It means we are going to go lower. Whether we bounce up or not Monday and Tuesday, I don't know. And that's what I'm going to go into right now. Now, why wouldn't we go low? We technically broke down, but why might we not go down too hard Monday and Tuesday? By the way, I think we are gapping down on Monday. I'd be very shocked if we do not gap down. There's panic out there. People are freaking out there. All right? And the reasons why we might not go lower too much on Monday and Tuesday is because of this, folks. The Fed has a policy statement on Tuesday, and I cannot see them having the market coming down hard Monday and Tuesday ahead of a Fed meeting. Now, basically, this is what's setting up for, guys. The Fed has to speak on this term and talk the truth. Basically, Cramer was saying here is that people need to just step up and tell people how bad this is. All right? You guys know, literally, a year ago, I was telling all the subscribers that this is going to be a big deal. And everyone said, no way, no way. And the markets rebounded. Since I was talking about how bad this will be in the future, now I wasn't saying that we're going to drop last year, but I said this will be a problem when we were talking about the housing crash. Everyone was saying, no, the housing crash won't happen. And you guys can go back and look at this and talk on, look at the media, all right? Everyone on the media was saying, it's not going to be that bad. They called already like 4 bottoms in the housing market. And no, it's not bottoming yet, all right? This is going to get worse and worse and worse, all right, folks? So what I'm saying here to you guys all is be ready for continued decline in the markets. What we're saying is be careful on the long side. There's no reason. We told everyone to get out long when we took the TWM position. And let's look at the TWM. That's the intraday chart. Here's the daily chart. Our subscribers all got this at $60.69. Now it just closed today at $75.89. That's a $15 gain in 2 weeks since we gave this call out, all right? Huge move. Look at this move. This is the daily. You don't see an ETF go up like this almost ever. And then look at this move today in it. Literally up $5 just today. All right, folks. So again, what I'm saying is that this is going to be a crazy market. We are going to have swings wild. We're going to go up some days and we're going to go down some days. But I'm telling you, we are going to go down to February's lows in the market on the SPY. Let's look at that right now. This is today. That's the here's the daily. All right, folks. Let's go back. Here's the February low or the March low, March 14th. 36.75. We will see that at some point in the not-too-distant future. Within a month, my prediction is, maybe even within 2 weeks, we will see 36.75 on the SPY. Okay. Now, I'm sorry to be so climactic and energetic today, folks, but this is just a huge deal today. This breakdown is a key breakdown in the markets, and I do again think we might not go down too much Monday and Tuesday. All right, these are the 2 scenarios, and I need everyone to understand these 2 scenarios, and I need everyone to be careful because these 2 scenarios are. There's 2 scenarios. Number 1, they don't take the market down. They got the market down Monday only to rally it back to even or positive, and Tuesday the same before the Fed. The Fed comes out, they drop the market. Okay? That's number 1. Second scenario, they drop the market Monday and Tuesday going into the Fed comes out, and Bernanke tries to push the market up by saying this, this, or this. Or who knows, maybe, you know, who knows what he could say, but he's going to try. They're going to try to cushion the blow here because this is bad. But let's be honest, folks. I don't care what he says. I don't care if it's a 1 or 2 day or 5 day rally. This market is going down because everyone has credit risks. Everyone has debt in this country. All right, credit card debt's an all-time high. Everyone has a mortgage. Half the people borrowed against mortgages they had already paid off their house over the last 5 years. All right, you got oil at near all-time highs. You got major issues in this economy, folks. It's not going to be easy. It's not going to be pretty. Not only that, but you have hedge funds going under because they're in these subprime loans. And remember, AHM, American Home Mortgage, all right, folks? AHM went out of business today. They just shut their doors. They said, we closed their doors. They laid off 6,000 people. They can't handle it. Lend, L-E-N-D, is near down about 80% from its highs, if not more. And we're not only going to see this, but look at Goldman. Goldman, one of the big players. Look at this chart. Down $7, almost $8 today. Anyways, folks, all I'm saying is that there's more to come because you have derivatives. And those of you that want to look up derivatives plus stock market on Google, I suggest you do because A lot of these hedge funds, a lot of these Goldman Sachs players are exposed to these derivatives, and when they go bust, it's a cascade effect. That's all I'm saying, folks, is that you start with the credit, that's the first, the mortgage, the subprime mortgage is first, then it spreads to prime mortgage, then to derivatives. And what's going to happen is massive hedge funds are going to start to dump because they can't take the risk anymore, guys. Risk is nearing an all-time high at this point. Well, not all-time high, but you guys, just in the near-term high, and it's going to get ugly. So please be careful. We will keep you guys updated. Let's look again at the NASDAQ chart here. Look at this close. We did close below the low the other day, it looks like. 25.15. Today we closed at 25.11. Again, that's a breakdown. Again, remember the two scenarios from Monday or Tuesday. It's going to be one or two. We're either going to push up Monday, Tuesday, drop on the Fed, or drop Monday, Tuesday, and push up on the Fed. Bernanke will speak Tuesday. It's going to be huge. Pay attention. Take care, guys. Have a wonderful day.